Good morning, traders. Post FOMC slash GDP slash earnings. Everything came out super bullish, or at least in as far as the market's response to it. And once again, it's they don't give you much, but to fade the extreme rally on the opening. And I'm going to briefly show you the best way to approach this. I mean, ideally, we all want to be long. We get it. And the number was good, but they factor it in. And generally, the early money gets pounded, and you can see the result of that. And they give you the opportunity to short side. So, something you can maybe pay attention to as a trader and how often this occurs over the years, something I have noticed over and over again, is pay attention to the first bracket after 9 o'clock, 15-minute bracket. That would be 9 and 9:15. And the other one is around 2 to 2:15. We always, for some reason, get an interesting move at that location. Usually, the first half hour is they're fighting it and they're trying to determine they're well above R2. It's early. I mean, even if I got a signal for a long here, I probably wouldn't take it. I just think the risk is too great. I think the best bang for the buck is the short with confirmation, and you got it right here, just around 9 o'clock. And you can see the momentum. It took a while, but eventually it started to unravel. The bigger deal was the NASDAQ, which was just screaming. And they also started to roll at about the same time, and they took off around 870, and you can see the result of theirs. So, they're just going to keep slamming the early aggression. And if you needed to, and this was the first swing down, and I'll show you one last thing and how we came down here, and you can see they're trying to decide whether or not they want to roll them, but they're not getting a lot of momentum. They're making this high around 23 and a quarter, and pay attention to that. They roll another time. You can see they're holding around 15, and then they come back up. This is a double top right here at 23. That was your momentum fading, rolling, and then your another short right here, probably around 19. That would have taken you down to R1. The rest of this downside could be a little tricky, so be careful. And the reason being is, let me get this chart over so you can get a read on this. Oh, my apologies. It's a little, for disregard the Dow chart's a little jacked. Pay attention to this right here. This 15730 MA, and we have yet to get there. But you can see the Nasdaq is rolling. If we get underneath this, then there's probably a good chance we can come down and fill the rest of the gap, which in the S&P is up around 45.97. And you can see how this MA that I talked about yesterday has rammed all the way up to 80, 84. 83. I'm not saying we're going there, but you can just see how well price acts. In fact, yesterday I gave you this low, and you saw the bounce we got off it, and these lows, in fact, too. How price just bounced off it like a rubber ball. But right now, it's this number right here, and the Nasdaq will be the tell in terms of where we go. And right now, you can see prices hovering around R1. So, be careful here. We could probably come up a little bit. You can see the momentum is trying to push it, but there's still a little gap left. I don't know if it's going to fill it, but this is the best way to trade against a trend, even in this super bullish market. And it's really the best opportunity you can get. I know it's not what you want to do, but it's the best risk reward trade. So it's a brief look at today's action, guys. Hope you're trading well. Hope you're taking this information and banking it Take care.